Good morning, everybody. Welcome to the Flow Show. New week begins Monday, 9th of February, and we're over the Japanese election without too much fuss, it's got to be said. But there's probably going to be plenty of moves to come, no doubt, over days ahead. So we'll keep an eye on that. But otherwise, yeah, a fairly easy start to the week. Morning, Kay. How's your weekend?
Ohayou gozaimasu. We will do it in Takaichi's language today. Are you ready to do the whole show in Japanese?
Hey.
that's done. glad that's out of the way. Hey, how are you, mate? Hello, everybody. No, it's been some victory. Oh my, that was I think a lot of people. Well, I was expecting a victory, but to get such a majority is the biggest one since the wars, was still a bit of a surprise to most people, I guess.
Yeah, we've got to say that the polls and whatnot had been indicating that that was a possibility, but
Hmm.
it was still probably even stronger than what they predicted.
Oh yeah,
So
yeah, because even the polls, as it became clearer as one went, that there would be a stable, then a super stable, and now, but even them. Well, I mean, it's even a bigger one. The thing is, and which was funny because yesterday and I was talking about it, or over the weekend, Saturday or yesterday, I was talking about the weather in Japan. It's possible that it had an influence because it's been snowing Tokyo and north of Tokyo. And that may have kept some elder people at home, because the turnout at the voting stations was lower than prior elections, and the anticipation votes, they were much higher than the prior. So I guess that hints at that biggest support. Age group between 20 and 50 were probably the biggest voters. I haven't seen any details, but I would suspect that may have helped as well. But in the new party, the old DPJ, they got an absolute pasting.
yeah, yeah. Well, one could say instead of saying she won by a landslide, she won by an avalanche, seeing as that was the weather.
Mm.
But that's a pun for Mr. Brown if he's watching. Right. Anyway, we'll get stuck into all the election stuff in a bit more detail in a moment. Firstly, there was a story doing the rounds that China has asked its banks to sell US treasuries. Now, obviously, they've come out with a big clickbaity headline trying to set some market moves and whatever. This has come from the usual suspects over at Bloomberg, but you need to know the details of it. Firstly, China itself, the government, hasn't made any more recommendations about getting out of bonds. They've been getting out of treasuries for a couple of years now. Their holdings are now less than half, or around about half of what they held at the most. They did have some 1.3 trillion, and they've got some just under 700 billion holdings left. Banks themselves own or hold potentially less than that, around 298 billion. This is dollars. And it's not Chinese authorities telling banks to fire sale US treasuries. They've told them not to. It might be worth not purchasing any new stuff, and any who have got slightly large positions just to reduce them down a bit. But that might be something we start seeing in the headlines, particularly when the US comes in, that people start making a big song and dance about. It's not a big song and dance. Is it potentially bad news on top of this Sell America theme? Yes, but it's not any sort of disastrous news, and the US bond market isn't going to collapse anytime soon. We had some data out from Japan overnight as well, pay data, wage data. Overall wage Income was at 2.4%, missing expectations of a rise of 3%, but still up on the 1.7% previously. Within those details, real cash earnings were down 0.1%. They were expected to rise 0.8%. This is one of the key metrics we need to look at, real cash earnings that stripped out after inflation and whatnot. They were previously minus 2.8%, but that got revised up to minus 1.6%, but still another negative. That's something Takaichi and the Bank of Japan will be keeping an eye on over the months ahead when we get those spring wages. Cash earnings or scheduled full-time pay was 2.1%, which was a bit lower than prior at 2.2%, but that was a upward revision. Otherwise, it would have come in higher. So wages, okay. But as I say, those real wages are the key metric that we need to keep an eye on. Right, so as Kay mentioned, Takaichi won the election. She won 352 seats. So that gives all the strength in the world. She's, or rather the Ishin leader, co-leader, Yoshimura, confirmed they're going to keep pursuing a joint agreement. Takaichi also wants to pursue a coalition expansion if the DPP is keen. So not happy just to sit in that one coalition. She wants to go for more as well. Takaichi with some comments saying we don't have a majority, well, we still don't have a majority in the upper house, although that doesn't really matter now. She's got enough seats to swing things as well. She says she will restart Parliament session swiftly. We're looking at the 18th of February for that. We'll push forward the national discussion on a food tax cut, but will not resort to debt issuance to fund the suspension on sales of food tax. So there's been a lot of chatter already about how she's going to fund this particular thing. Doesn't look like any fresh debt is coming, which will be good news for the market. So overall, we saw no real massive volatility, shall we say, but we did get some moves. The yen did have a go at weakening. We got up to 157.76, I think was the high, Sunday night, and then it's been pretty much downhill ever since. So it potentially suggests that maybe quite a bit of this was just a bit of that weakening ahead of the election, and now we've had the old buy rumour sell fact trade going on. The fact it hasn't weakened further is a good indication that the market was probably well priced enough for that result. Japanese officials all over the shop were coming out with strong verbals. Probably they were just as worried as we were about the yen weakening after the election, but now things look steady as she goes. Kay, do you think we're price-wise we're over the election hump now, and now it's just down to policies and what they're going to do and how fast they're going to get it done?
We're not completely over it because we heard from as well Katayama as Takaichi that they won't issue deficit bonds to fund any potential tax cuts, but sorry, the food tax cut. But we still don't know how they're going to fund it really, right? There was a bit going on about Katayama hinting at perhaps having a look at the FX reserves, but then herself already saying that it may not be a brilliant idea, which I agree upon. And we still, and as Takaichi said herself, she's planning to put everything on the table for the summer. So we still have a bit of time to go. The first reaction, as you said, was well traded, well documented. Also, I think Katayama was fast enough to remind the markets about and she even called it a memorandum of understanding with the US, Reed Besant. And I think the market went like, well, all right, let's give them the benefit of the doubt. Take, I guess, people short yen took profits, and here we are now. Compared to where we closed on Friday, we can say it's been pretty much a non-event, right? Even though we had 100 and what 140, 50 pips range in the end, but that's not surprising on the back of such an election. So I think they managed to calm the markets for now. We saw a big rally in the Nikkei. That really underscores the support that she gets for whatever plans she may have. And JGBs went like ticked down a bit, but then also stabilized. So I think the market is really giving her the benefit of the doubt. Um, so it makes to me the first scare is over, but they're not out of the woods because if she comes out, because they still will have to fund big plans and we don't know yet how they plan to fund the tax cut. So yes, I mean first scare is or scare, no, not a scare, but first reaction is over. Now let's see what she comes up with. The good thing for her and perhaps over the more medium term for the yen is the international and local support to do whatever she can do. And it does seem that if you look at the JGBs, then more in particular in the Nikkei, that the market wants to support what she wants to do.
Yeah, absolutely, because she's actually doing fiscal measures designed to help the economy,
Yeah.
which is a far cry from what's going on in the UK at the moment. So yeah, the market is perhaps starting to get behind her. That this might be good for Japan rather than
Hmm.
just throwing more kitchen sinks at a problem that isn't going away. So we shall see. We shall see. I think she wants to try and get stuff through before. Is there a recess in the 31st of March or something? In a diet, but
I haven't looked at that, Ryan. But I mean, okay, she can push stuff through before the end of the fiscal year, but when she hints at stuff, summer, I reckon we are looking at start of the new fiscal year. We should know a lot more.
yeah, exactly. And
I don't know the details about recess also. No.
yeah, oh, it might just be getting in towards the financial year, and I don't know. I read somewhere a couple of weeks ago that there would have been
Mm,
there's a bit of a squeeze if you wanted to get stuff through pretty quickly. But anyway, in typical Japan fashion, what's going to happen is we're probably going to be trading all these policies as they come through,
mm,
but afterwards it's obviously going to be a long drawn out affair. These aren't 5 minute policies. It's going
exactly.
to take a long time to play out and do what they need to do. So
Yeah.
that's we'll be looking at that for the
Exactly. I
months
mean,
ahead.
it's uncomparable to, for instance, the French saga that we had, throwing stuff on the table and then getting fired down or support or whatever, and then back and forth between. No, in Japan, everything goes to their rhythm, which is slower than elsewhere, but. It's a big thing though what she got now. So yeah, it's could actually mean that the yen or the whole thing, if the market really buys into it, gets support a bit earlier than what I would have thought.
Yeah, we shall wait and see. Right, let's move on over to the UK and a report from UK recruiters saying that the UK jobs market is moving past the worst. So that will be something to keep an eye on in the data ahead. If the jobs market seems to stabilise, that will bring a bit of relief for the government and for the BOE in particular. BOE's Peel says inflation falling to target earlier is good news. It says there is a danger of distorting underlying CPI dynamics. There's a risk that we draw too much comfort from a dip in inflation that will come in April. We've got this stuff rolling on with Starmer. As I was saying, next week, the general thinking was that he may be able to survive this episode, and then May will be the crunch point. But you get a weekend in the UK, and seems where a lot of political business is done. Today, now he's hosting a meeting of all his party members, MPs, backbenchers, and everyone in Parliament. He's having a big meeting with those guys, probably try and save his skin. There are rumours that people in his cabinet are asking him to resign. He's also apparently got a speech scheduled to address the nation later on. So it all could come down to this meeting. He's probably going to try and fight and stay in, but there is a chance that if he gets a poor reception from this meeting from his own party, that speech later on could be a resignation speech. So we've got a bit of political risk for the UK today, later on today. We're already seeing the pound looking a little bit softer as it came in trading today. Gilts opened up softer as well, but they've come back a little bit. But it's all on the fence now. So it's all on the wire for today. We could be looking for a new PM by the end of it. So be careful if you're trading the quid today. That's the risk that we've got. Over to the ECB, and McClough sees a small upside risk to the December growth projection. I love the way they see a possible rise in growth forecasts as a risk. Only in the Eurozone do they think that. Looking back at a bit of data we got last week, just to tidy up bits and bobs. Canadian jobs came in a bit of a negative, down 24.8 thousand, though it does look like there's potentially some seasonality in there because full-time employment was up a healthy 44.9 thousand, and it was part-time that did the damage, falling 60, just under 70,000 there. So maybe some washout from Christmas and whatnot, part-time workers. There's good news in the unemployment rate, though. That dropped to 6.5%. And although the participation rate came down to 65% as well from 65.4%. Michigan flash numbers for February came in a little bit better. 57.3 for the headline number. Expectations, though, were lower than expected and last month. We also saw 1 year inflation dropping to 3.5% from 4%. So that'd be some good news for the Fed, although the 5-year ticked up to 3.4%. Other than that, not much fuss about that data. We also got consumer credit data later on Friday evening coming in at a bit of a whopper, a 24 billion number. Was expected to jump to 9 billion. Looking into this details, it looks like a bit of last minute holiday spending, or money was shifted to spending for Christmas as opposed to earlier in the month. So we'll see whether that drops out when we get the January numbers. We had the GDP nowcast, was it New York Fed, I think, that dropped that one, coming in for Q1 at 2.59% from 2.73% previously. White House's Hassett has apparently gone a little less bullish. Instead of seeing GDP forever at 5%, he says it's going to come down a bit from 5% to 4.5%. So he's already cutting his own forecasts on that. Fed's Daily says we need to watch both sides of the mandate, says the situation feels precarious. She's keeping a very open mind on interest rates, but is leaning towards more cuts in 2026, but doesn't know if that's going to be 1 or 2 cuts for that. Fed Jefferson says current monetary policy is well positioned to deal with what likely lies ahead, but he doesn't want to see any further weakening in the US labour market. Well, we might find out on Wednesday whether he's right or wrong. The US apparently is looking at March for a peace deal in Ukraine, and then to follow some quick elections over there to get a new leader in. That's where we are with that. We've had all this Iran stuff bubbling over the weekend. No real solutions popping up from that. It looks like it's going to drag on for a few more days yet. But the key thing is there's been no bombs or whatnot flying over that. So that's just a continuing situation. Kate, anything else?
Well, there was this little thing about wars, right? Over the weekend, and came out on Bloomberg, I think, saying that he may look at a new accord between the Fed and the Treasury. And I think somewhere in what we're seeing in the market right now, for the dollar wise, is just added a bit to the fund because giving more say in Fed's bond holdings maybe, or having a debate about it already with the Treasury, is giving a bit more independence away. I'm not sure if the market really trades on the back of it, and it could be going into the bin or just be like some kind of an idea. It was, I think it was in some interview also, he brought that up, but perhaps not like as this is what we are going to do. But if the story gets legs and the market sees a bone to chew on, perhaps it's going to have to be something that we think about because we know how the market feels about Fed independence, stability in markets on the back of it. Yeah, it could be just a story that we need to keep an eye on, especially knowing that Wash is going to be the next Fed chair.
Yeah, he's probably it's probably part of the conversations he's been having with Besant, I should imagine, because Besant was doing the interviews.
Hmm.
So I can imagine that's all come around from that. But yeah, we'll have to see
Yeah,
what happens with that one.
but something like that, and in the details that he talked about it, I think that's something that's a bit new. I think so. It is something that we will need to keep an eye on, especially if we hear both of them starting to talk about it, and then it will be something that the market will probably trade.
Yeah, absolutely. Right, let's have a look what's coming up this week. Nothing really of note today from anywhere. Tomorrow we get some what it was delayed data, US retail sales, employment cost index, some price data, business inventories. Wednesday could be an important day for China. They've seen a bit of a pickup in inflation, so we'll see if this month's numbers confirm that that's continuing or if they're going backwards or not. And it is US Jobs Day, so NFP is Wednesday for all those wanting to know. And I'm just going to grab the link quickly because our competition is up and running. Let me grab that. Boom and boom. There we go. So if you want to get in on the NFP competition, just jump on there. That's in the Zoom chat. So yeah, NFP on Wednesday. Don't miss it. Don't turn up on Friday because you'll have missed it. Japanese PPI on Wednesday as well. Gives us a little bit of price data. UK has some GDP figures, monthly and quarterly numbers on Thursday. Then we get a bit of housing data from the US as well on Thursday, jobless claims as always. And we get some flash Eurozone GDP numbers, obviously, for Q4, so we're well over that. And then we get US CPI on Friday. So that will end the week for that one. Anything else you got a note you're keeping an eye on for this week, Kay?
No, I think we do have quite a few potential market moving events, right? So I think it should make for a very interesting week. Job data, CPI at the end. But what I'm really going to have keep a very close eye on, Ryan, is we have Barbados parliamentary elections on Wednesday.
Oh my God!
I think that's that's going to be one that is really going to move the market.
Yeah, you know what? I think I'm going to ask Blake. I think someone needs to cover that live.
Yeah, actually.
from from from, from Barbados.
From Barbados. Oh, yeah. But
Give him the
isn't it a
bloody
bit
weather
too
here.
windy over there?
I don't care if the sun's out. I don't care if it's windy. Yeah, so I'm going to suggest that to Blake later. That I'm front of the queue for that one. Yeah, definitely. You guys definitely want it covered live, don't you? Make sure you let Blake know that we need live coverage over there. But yeah, other than that, yeah, I'm actually glad we're getting NFP on a Wednesday because otherwise we just spend the week waiting for it on Friday.
Yeah, and then have You know what? I think it could. You're right. It's interesting because usually we have it on a Friday, and then the moves be behind, etc., etc. But now we have like a half a week to digest and trade the whole thing. If it's a market mover, if it's enough of a market mover to create a bit of direction even in the same week, then have it on a Friday where it tends to get a bit messy, and then what are we going to do once we come out of the weekend? We won't have this kind of break between the data and what's happening the week after. I think it's pretty good actually.
Yeah, if it's any good, we'll have to campaign to get it shifted to a Wednesday, perhaps.
Yeah, absolutely. Let's call
So
who is it? Oh,
Trump,
Trump.
let's just call
Let's
Trump.
call the big man straight away.
Yeah, let's cut out the middleman. Let's just go to the top and just stick it on Twitter. He'll probably respond. But yeah, anyway, so that'll keep us entertained for that. Right, let's have a look what's going on. So I already looked at dollar yen. No point in going there. Obviously, the pound's in focus. We've had another little look up at this 87.20 level. Had a little nosy above. Couldn't hold on to it though. We're back below it again. I don't think this is going to be dipping back too far ahead of these meetings that are coming up. I do see some risk that if Starmer, I would say, gets the green light from his party to continue, then we could see the pound coming down a bit, because that would indicate that he is getting over this hump and the Mandelson thing, but still keeps the risk on
Pound
those.
coming down or
Sorry,
euros going?
euro's coming down. Sorry. So
Yeah.
the pound's gaining a bit back. So yeah, I can see, as I say, the pound recovering a bit more if he gets the green light from his party later on and he's not out the door come close of business tonight. Whether that's enough to take us all the way back down to here, it's possible, and then we probably go back into the mess. I think if he does resign, I wouldn't be surprised if we're off up trading up near 88s on that sort of headline. Because I think the market will. We've already seen the market get nervous if he's out, because we could get someone who's politically seen as worse, fiscally seen as worse if the Chancellor's on a way out, for someone a bit more hardline. So all that we'll have to look forward to if it happens that he gets the boot or resigns. So a bit of risk for the pound on this one. Cable, a bit of a similar situation, but obviously the dollar in the mix as well. We don't know what's going to happen with this one. I haven't liked really trading the pound cable on what's going on in the UK, because there's obviously so much more going on in the dollar side of things. But this one, if the pound takes a bit of a hammer in here, but the dollar's a bit weaker elsewhere, it could be a bit of a catch-up trade, a bit of a fade trade, but be very careful with a quid today any which way. Aussie Kiwi, that was off and running a minute ago, breaking up through 117, up through these prior highs. That's running out of puff as well, and we're coming back down inside that. Look to these prior highs around this 60s, 70s, 80s area in the first instance, and then down to the 50s, 60s in the second instance for this. But if you want to look for some levels on the wide, we'll go on the big chart, because we got this fairly decent level here at 117.60, which has been a bit of a historical level. And just in here, 2013, you could see, where are we going? In here, it was a bit of a low point, and then it was a bit of a break point, and then it became a bit of a resistance point on a weekly basis. So that's going to be the next one to watch down in here. And then we've got this 50 retracement of this whole move coming in at around the 119, which is a bit of a level 2 on its own. So this one could be breaking up a bit higher. What else, Kate? I think I'm going to pass it over, mate.
Yeah, why not?
There we
okay.
go.
Yeah, do you hear me?
Yep.
All right, okay. And you see my screen?
Yep.
I'm on the euro dollar. So Yeah, we had a little bit of a move through that 30-35 there. We're already up at the next zone here, 118.65.70. There's a bit going on. I think if you think dollar may be a little bit on the weaker side as we've seen, but then also euro is getting a bit of support, in my opinion, from Lagarde, a couple of other people thinking that maybe the euro, the diversification in the euro may not be completely over. Seeing a bit more in the European asset market trading, perhaps a few ECB bots talking about that. It could end up being a bit more supportive for the euro. Now, we're still it's still, I mean, and even if you look at the longer term chart is still, apart from those spikes here and that spike there, it's still a pretty boring range in the medium term. But for the real short term, unless we see a bit of a dollar revival here, I would suspect that it may just drag us back into the 119s at some stage. That's how I look at it right now. For as long as we hold what we saw last week, that little drop down to this 117.45.70 is still going to be the biggest support, but already in between, let's see if we get a bit of a move back down to, let's say, 118.20.30, what's happening there. But I'm viewing the moves that we see here maybe as a little bit on the positive side. Do we have any? Do we have? No. I just saw a bit of a move there. Well, I thought in cable also. No. Maybe no headlines. Um, yeah, so maybe looking a little bit more positive to start the week there, for as long as on the real short term we hold above that 118 2030. I'm just going to have a quick look at that cable because we stopped on that little level here. We had this low on the second, high on the Friday, and we just tagged it again. And I have a little bit of a trend line right there. But I agree with Ryan. I mean, it's such a flip the coin to trade it right now because any headline surrounding what happening to Starmer is can take sterling like 50, like 0.5% away probably. Now, if we get, and just wanting to finish on that one, I think if looking at how the dollar trades right now, if you get a positive news sterling, perhaps cable is going to push through. If we get negative news on the sterling, I maybe rather trade euro sterling, if you see what I mean, because of the dollar perhaps not being um, that buoyant right now. So I think one and the other side may have different pairs to trade. Um, Aussie. I mean, it's positive, and I think it is also positive that we opened the week above this 90-95 zone here, which is somewhere in the middle of the range. But let's not forget as well what happened the past weeks and sessions is that Aussie has been trading um, on the back of risk quite a lot. It's one of the currencies that has actually been doing having the better correlation in the FX sphere for risk. So we saw a bit of a move lower this morning on the US equity markets, and as a result, the Aussie also lost a bit of steam. So I still think it's positive, but keep keep those equity markets in mind because they could influence what's happening on the Aussie. Okay, Kiwi is even worse. I wasn't sure about how risk would impact Aussie Kiwi, but it's quite a bit higher, and that thing looks indeed, as Ryan said, off to the races. And you see, as you can see, Kiwi has a lot more difficulties to get up above this wedge here. So I'd be a bit careful with it because of this Aussie Kiwi. If the dollar continues to weaken, yes, we could do a bit of a catch-up move as we have seen already in the past, but I still think it's going to be a slower one. This is rather one that I would keep an eye on in case the dollar gets a bid back, because if we start to get back below, and it's extremely close, I know, but even 60, the figure already is a little bit of a psychological level. You get a close below, it to me it could be looking a bit fragile for a return a bit lower. So different currency pairs may have different behavior in what's going on to start the week. Um, and I'm not say extremely bullish, but I quite like what I'm seeing on the euro mostly, and perhaps the Aussie. Then I would prefer the Aussie over the Kiwi if the dollar continues to weaken. Okay, gold back above 5K, just dumping a little below. We are still watching on the white, this 50, 44, 51. Okay. Um, and this morning we will see what happens over the next few days. But if this Chinese story gets a little bit of legs. I know it's not something that is new. The Chinese US Treasury story, um, but it could just push the Chinese to go even back more into gold, perhaps. So we need to, and I'm a bit early, but we need to know that it's next week, right, Ryan, that the Chinese New Year starts.
This week, 12th, I think.
Huh? Already? I thought it was
Yeah,
on the 17th. No?
I thought we
Let me
were
see
read the
the
12th.
calendar. Could we have a quick look on the calendar to see
Yeah.
when China starts
Sorry,
to?
17th. 17th.
Oh, okay. So we're still a week away, but know that ahead of Chinese New Year. And in Chinese New Year, we usually have a bit of gold moves, okay? Gold, silver, they could see the last demand before going into the Chinese New Year, and then we have a little bit of a dip. So again, this week I think is going to be an important watch what's happening in the Asian market, and we can see double I mean different time zones with a different behavior in the metals. That's really what I want to say this week. On the levels wise, again, 5100. I think if it goes through there, we may see a bit of an acceleration. And then on the near side, I would say somewhere 4930s, but I'd keep an eye on what's happening around here. Then that's around 49, just below 49, around 48.90, 4900. If ever we dip back below there, I think we could see another one of those moves bringing us maybe closer to 47s, that famous 46, the 61.8 that held. But just those are the two levels that I would keep an eye on, especially. So there's a 5100 and the 48.90 figure. If it comes back down there, a silver, yeah, I mean, it's going back up and then it's, it's dropping back down. I mean, pick a side. I'm really thinking that we could just continue to go up and down, up and down, up and down. Again, bear in mind the geopolitics. If there is talks about solutions on conflicts, etc., it should have a bit of a negative impact. If I don't know, China comes out more bellicose versus I don't know who, it's probably going to have a bigger impact on the top side. I would say the major levels here is probably 83 and a half, 84, and then 86. 86 is going to be interesting because it's not only fibs, but it's also levels where it stopped on the way up and on the way and before crashing even here. In the big crash, we had interesting moves around that 86 zone. On the way down, anywhere between 77 and a half and 75. There's a bit of traffic that over there as well. But then the bigger one will still be around 70, 70, I think. I've got absolutely no preference in this right now. I still think that the really long term, it's going to be still supportive, but I don't want to trade it right here and now. Um, is that it or anything else? I'm quite annoyed. Whoops, what is this? Quite annoyed actually. Not. having kept dollar mix. That little spike there, it really pushed me away from wanting to get back in. But we saw straight away the rejection after Thursday evening, Friday morning. Then we came all the way back down on the dollar mix. We are back in that zone. And then bearing in mind what's happening on the dollar, we do have Mexican inflation data out, guys, in just a little bit, under an hour. So this could be maybe a little bit of a mover, knowing that we just had the Banxico behind us. But I do think that any move closer up to that 1740s again may find a little bit more selling. Fred, you asked about Euro Aussie. I need to add a bit here. I think this crossroad here is still important. Um, for the let's see what's happened here. I don't know if we have like really. There is a level actually, the 78.6 around 168.30, which has held. So this whole thing here, this whole zone between 168, those highs here as well, 168-ish, 169-ish. That's a bit of a decision area. So if we start to get back above 69 and hold it, we may push a little bit higher again. But watch out if we get back below those prior lows here, because then I think it's going to go down. And for that, again, I think you will have to watch what's happening on the equity markets in the risk picture. Okay, I'm actually supportive on both. I think I'm a bit bullish on both, so I'm leaving the Euro Aussie alone. But this is still a picture that looks relatively soft to me. And with that, Ryan, back over to you, mate.
Good stuff as always, mate. Thank you very much. We got you ready for the week ahead, hopefully. So take care. Remember about the NFPs on Wednesday. Look for that pound risk later on today from UK politics. Have a great day. Have a great week. We'll see you all tomorrow.